All right, let's talk about building your financial future. We're going to demystify investing today. Seriously, forget all the noise about it being some complex, unknowable machine. I want you to think about it like a construction project. You are the architect, and today we're going to walk you through the blueprint. So let's just get this out of the way, because it's the one question that stops so many people dead in their tracks. You see the charts, the flashing numbers, and it's easy to think, isn't this just a big casino? But what if I told you that with the right approach, it's not a gamble at all? No, it's about building something solid, brick by brick. Something that's built to last, you know? Something that can weather a few storms. And to do that, you don't need luck. You need a blueprint, a clear, structured plan. And that's exactly what we're laying out right now. Okay, our first pillar is all about your building materials. Think about it. You can't build a strong house with weak bricks, right? Well, you can't build a strong portfolio with weak companies. So the very first step is learning how to size them up, how to tell the good stuff from the bad. To do that, investors have this kind of three-part toolkit. First, there's fundamental analysis. That's like checking the foundation. Is the company actually making money? Is it financially sound? Then you've got technical analysis, which is more like checking the weather. What are the market trends doing right now? And finally, qualitative analysis. This is about the people in charge. Is the leadership team any good? Do they have a vision? You really need all three to get the full picture. So the core of that fundamental analysis, that foundation check, it's all in a company's financial health report. The income statement tells you if they're making a profit. The balance sheet gives you a snapshot of their net worth. But honestly, the cash flow statement is often the most revealing. It shows you where the actual cash is going. And here's a pro tip. A company can look profitable on paper but be totally running out of cash. Cash flow tells the real story. But numbers just never tell the whole story, do they? I mean, why does one company take off like a rocket while another one with the same exact financials just sits there? Well, it often comes down to the stuff you can't put in a spreadsheet. Things like visionary leadership, a brand that people are obsessed with, or some game-changing new tech. That qualitative edge, that's the secret ingredient. So you've picked out your high-quality materials. Awesome. But a pile of the world's best bricks is, well, it's just a pile, right? Without a blueprint, it's not a house. And that's exactly what a portfolio is. It's the architectural plan for your investments. It's how you put it all together. And the single most important principle in that entire blueprint is diversification. This is the bedrock. It's the smart, strategic way to manage risk by not putting your entire future on one single bet. You spread things out. It's just common sense, but it's incredibly powerful. I mean, we've all heard this a million times, right? And there's a good reason for it. If you drop that one basket, you lose everything. By spreading your investments out across different types of assets, different industries, even different countries, you're building in a safety net. You're protecting yourself from a single point of failure. And this is what that blueprint can look like in the real world. See? It's not just a random jumble. It's a balanced design. Stocks are your skyscraper. They're aiming for high growth. Bonds, they're the deep, steady foundation, providing stability. And other things like real estate, those are the supporting beams. Every single part has a job to do, creating a structure that's strong enough to handle market earthquakes. Now, when it comes to managing all this, you've got a choice. Do you want to be the star quarterback, try and make the perfect plays to win the game? Or do you just want to own the entire league? That's the difference here. Active managers try to pick winners to beat the market average. Passive managers just aim to match the market by buying a piece of everything. Active can have bigger rewards, sure, but it also comes with higher fees and more risk. Passive is simpler, and for most people, it's often the more effective path for the long run. Now, over time, your carefully designed building can get a little out of whack. Let's say your stocks have an amazing year. Suddenly, they might make up 70% of your portfolio instead of the 60% you planned for. Rebalancing is just the regular maintenance. It's the discipline of selling a little bit of your winners and buying a bit more of your underperformers to get everything back to your original blueprint. It's smart, systematic, and it forces you to sell high and buy low. Okay, so we've got our materials and we've got our blueprint, but there is one more critical piece to this puzzle, and that's the builder. That's you. And honestly, your own psychology can either be your greatest asset or your biggest enemy. Look, our brains just weren't built for the modern stock market. We get overconfident when things are going great, and we panic and follow the herd when things get scary. And get this, psychologists have shown that the pain of a loss feels about twice as bad as the pleasure of an equal gain.
That makes us sell at the absolute worst times. So the most important skill here isn't outsmarting the market, it's outsmarting that little irrational voice in your own head.
So, how do we put all of this together? How do you actually make it work? Well, it all comes down to following a clear, continuous process. And here it is, the whole blueprint in one place. It's a cycle, see? You start by analyzing your materials, the companies. Then you build a diversified structure that fits your goals. You manage it with a smart allocation plan, and you maintain it through rebalancing and, maybe most importantly, by keeping your own emotions in check. It's a continuous loop of discipline. And look, if you only take one single thing away from this entire explainer, let it be this. The number one factor that is going to determine your long-term success is not your amazing ability to pick the next hot stock. It's not. It is your asset allocation. How you build and maintain that diversified structure. That is what matters most, period. At the end of the day, this isn't about some abstract theory. It's about real actions. Every decision you make, big or small, is another brick you're laying in the foundation of your future. You have the tools now. You have the knowledge. So the only question left is, what will your blueprint look like?